banking to actually EMS, and big boost for Dixon Tech. Reports suggest Google could shift some production of Pixel from Vietnam to India, which could garner revenue, roughly a revenue opportunity of 9 to 10,000 crore for Dixon Tech. Puneet here to contextualize that for us. 6% move on the stock, Puneet.
Definitely, and if you look at post the tariff impact, the stock was at actually 13,000 odd level. So it's really boomed in the positive side, and as you rightly mentioned, could be because of some potential production being shifted of the Pixel smartphone from Vietnam and China essentially to India. Now the key aspect is that it is part of the de-risking strategy for Alphabet, which is the parent of Google, in terms of the sourcing of these particular smartphones, and localization of some components for the Google Pixel could also be on the cards. Now Dixon definitely would be a key beneficiary of this particular aspect because they had signed an agreement to make the Google Pixel in India back in December of 2024. Now Dixon has an indirect agreement essentially with Compal, in which they signed in February of 2024 to manufacture these phones in India. They were essentially, of course, to first manufacturing partnership essentially with Compal, and Compal is one of the world's biggest EMS players and leading manufacturer of notebook and as well as smartphones and PCs. So Dixon has a manufacturing agreement with Compal, and with that they can manufacture the phone in India. Now currently the Pixel sells roughly about 1 crore phones that they sold in 2023. So it's a sizable opportunity. If we can contextualize that in terms of revenue, even a 30% shift of production from Vietnam to India would roughly be a 9 to 10,000 crore opportunity, as you rightly said. Nomura is assuming that 60% would go to Dixon, because we also have something like a Foxconn with manufacturers the Pixel in India, but they are anticipating Dixon to be the biggest beneficiary as well, and that's one of the key aspects. So we also spoken to the management a few weeks ago, and they mentioned they're anticipating a 150 basis point margin impact over the next 2 years. So all these signs, baking in very good estimates for Dixon, and I think that's where the market is preempting some of these positive moves, which could be contextualized in this particular results as well.
Interesting. Thanks so much for that, Puneet. Dharmesh, let me come to you right away on that one. This entire EMS basket took a bit of a beating over the last couple of months at the very least. What's the sense like at this point? Risk reward favorable, or do you believe it's stretched?
Yeah, good afternoon, Harsh. I mean, the entire EMS basket has been running on the news flow, the positive news flow surrounding them, and even they have been revenue accretive as well. If you look at Dixon Technology, it's been growing at a CAGR of 30-35% for the last 10 years, and that has been maintainable. So to get this CAGR materialized in the near future as well for next 2-3 years, you have to have this kind of order inflow coming in, be it Google or be it somebody else. So otherwise, you can't have the same run rate going on your top line. So I think it's a part of the business model, and they have been doing fairly well. And if you look at the EMS segment, naturally, if you speak to any of the promoters, the maximum growth they can do year on year is 35 to 40% only, because of the capacity constraint and the new technology and everything which has to be put into place. So keeping that in mind, I mean, it's a trade today, it's playing out. It can play out for a couple of days more, but just have in mind it's a low margin business, 4 to 5%. 150 basis point improvement leads to your 5.5% kind of an operating margin. And valuation, it is trading at around 160 times PE multiple. So there has to be, at a point will come when such kind of a justification has to come into play. And this was the valuation concern which had a serious sell down happening. But given the uncertainties which is surrounding the global environment, such news flows for EMS company, at least in the short term, will find bias and the trades are up. From investment perspective, I think new investment should be avoided now.
Okay, that's the view on Dixon.